Good afternoon, everyone. My name is Kid Almond, and today I'm very excited to talk about Tesla, ASML, and the S&P 500, and some cool patterns that I've observed on almondinvest.com. So, yeah, all this information is free, and this site is accessible to everyone. Just a quick disclaimer: obviously, you should not take this as financial advice, as I do not have any formal education certificates or degrees from any formal education. So always consult a financial advisor before making important financial decisions. Last but not least, thank you, Benjamin Cohen, one of the best stock YouTubers on YouTube, and it's where I get a lot of my insights and ideas from. But yeah, so what should we expect for the S&P 500? And the reason why the S&P 500 is really important is because I usually use this as a gauge to determine what most stocks are gonna do. And one thing that I've discussed on this channel is these two indicators which you can click on this menu here, and it's called the bull and bear band. Now, if we look, we can see we're right above the bear band, this blue line right here. And that's pretty important because if we look throughout history, what happens when we usually touch these bands is usually it's not good. For example, if we look over here, we can see the S&P 500 went below these bands down here. It went slightly above, cratered down, touched the bands, and cratered down again. So we can see it hit the bands 2 times in this area over here. Let's see if I'm in this area right here. We touched those bands twice, and each time we just went further down. We can also see another example here. This is actually COVID, and we can see we went down, we went slightly above actually these lines, and we went down, straight down. But you can see we slightly went above, and then in the next few weeks, we just went straight down. If you look over here, we can see the same exact pattern play out, where we, sorry I messed this up. We go below these bands initially, we come up above them, come down lower. We go above the bands, come lower. We sit for a while, we go above the bands, go lower, and we essentially do this 3 times. Sometimes the drawing doesn't work on my website, which is pretty cool. And then the last obvious example is sort of over here, where this was the last year with the tariffs, where essentially we went down, we touched these lines, and instantly dropped. So historically, whenever we go below these lines over here, whenever we go below them, oh gosh, what is going on with my website? I think I coded this pretty bad. There's a little bit of an issue here, but we can see that we're basically right now we're just hitting the bands. So historically, this has not been a good pattern. Seeing this play out, so I expect the S&P 500 to actually go down and follow the exact same pattern that's fallen over here, for it to go down. That did over here where it went down. 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 And over here where it went down. So every single time we've gone below the lines and we touch them, we usually go down. That at least seems to be the historical pattern, even over here. So yeah, I expect us to go down a little bit, but how much should it go down? Well, we can actually look at this indicator called drawdown, and basically this tells us how far the S&P 500 has dropped from its all-time high. So if we look over here, you can see the value right here on my red box. Oh, actually my camera is blocking it, so let me just put it right there. But you can see on this side where my mouse is right now, that shows us the value. So if we look over here, we can see this right here was a 33% drop, 32% drop from its all-time high, basically, if that makes sense. If we go over here, we can see this was about a 17% drop from its all-time high. So that's essentially what the red line is showing. Commonly, what I've seen is usually a good time to buy around this mark right here, which is usually the 17% drop mark. But I expect the S&P 500 to actually drop around 20% from its all-time high. So, if we do the quick math, which is zoom over here, we'll turn this off. But 20% from the all-time high would be pretty close to around 580 is essentially where it would go if it went 20% down, or roughly around 580 from if it went down from here. Actually, 560 actually would be closer. 560 if it went down 20%. So that's kind of what I expect in the short term, that we start going down. Now, it's possible we linger a little bit. So, I mean, if we look back at these bands that I had, I mean, it's possible. Like, if you look over here, I mean, we went well above the bands a couple of times. Like, we didn't over here, we bursted above these bands a few times, but ultimately, we weren't up here long. Like, for example, over here, I mean, we were above these lines for like 2 weeks. Over here, yeah, like 2 weeks as well, and then we just ultimately fell down lower. So yeah, we might be slightly above the bands, but I don't expect it to be there too long, essentially. So yeah, that's basically what my short-term outlook is on the S&P 500. I expect to go down at least in the next few weeks. But one interesting thing that I've been looking at that I think is going to happen pretty soon is if we look at Tesla, we click on these indicators and we go to the 200-week moving average, which is this red line. This red line is essentially this slow-moving number, which kind of takes in the price, and it forms this line that you can see. And usually with this 200-week moving average, you can see that the stock actually will eventually come down to these lines. And it got really close there. And I'm having this is speculation, of course, but I actually think in the next, 2 to 3 months, these two lines are going to converge and get really close to each other. And that would be an amazing opportunity to be buying Tesla. I mean, actually, if you look, every single time it's touched these lines, you can see that's 120% gain in around, 6 months, so like half a year. And we can see this is, 150% almost kind of in half a year as well. I mean, if we kind of go to the half a year mark, I mean, it wasn't that great actually, but I mean, the stock usually rebounds pretty well once it gets close to this 200-week moving average. And I think in the next few months, we're going to get there. I mean, if we look, the current price is $346. This is, 266. So there's a $50 difference, but we're getting close. Now, if you want to be more robust, another metric you look is called this RSI. If you look at this RSI, you can also kind of see, let's hide this real fast, but you can see usually this green zones have always been good times to buy, right? And so what I would argue is with this 200-week moving average, if we just circle the areas where it gets pretty close to this, we can see these green zones usually correspond with where that 200-week moving average is. Usually corresponds with that. So if you see both the 200-week moving average and the RSI, being low, seeing this green color essentially, I think that'd be a fantastic opportunity to buy. Tesla's always shot up after that, so it wouldn't surprise me if we see that pattern play out again. And the last thing I want to talk about is ASML. So ASML has been a pretty good stock. And one thing that I find really interesting with this stock is if we actually look, we can compare it with the S&P 500, and it's to me it's just remarkable how similar these two stocks look. I mean, take a second to look at it, but I mean, you can see, I mean, they literally just move with each other perfectly, at least for this area over here. And then even kind of on the way down, I mean, dude, look how similar, like how absolutely similar these stocks are in behavior. I mean, this is insane. This is the part, though, over here where they seem to diverge quite a bit. But then, you know, they start climbing up together as well. So if you know it's a good time to buy the S&P 500, you also know it's a good time to buy ASML. Is essentially what I'm saying. And we can actually look. Let's look at the past 5 years of ASML. So let's go back to 2020. We'll go to this top. So let's say before COVID was announced. And we can see that it's gone up 300%, which is a little shocking because I feel like it should be closer to 400%. So it's like a 4x, right? But if we let's go to the S&P 500 and see what it did in 5 years. Well, you can see it barely doubled. So while ASML did a 4x, the S&P 500 just barely doubled. And they're so similar that it's like, if you know the S&P 500, it's a good opportunity to buy the S&P 500. If you're able to time these opportunities, well, you're better off just buying ASML. And if for anyone who doesn't know what ASML is, it's a chip manufacturing company where they produce hardware for computers. And the reason why this is important is because like they're the largest company in all of Europe, the most important business, and the European government is not going to let them fail, essentially. So and they have a monopoly actually over the chips that they build. I would do your own research into ASML, but I think it's a pretty promising stock. It's just the fascinating thing is that it moves so closely with the S&P 500 that it's like if you know it's a good time to buy the S&P 500, it's even better time to buy ASML. And you can see actually the last thing we'll just quickly discuss is that not everything really follows. Like for example, we can look at Tesla, right? Oh gosh, I don't know why that didn't work too well, but let's go to Tesla and the S&P 500. I mean, to me, these stocks just look so different. Like, I don't think they follow that similar. And, we can do the S&P 500 and let's say like Microsoft, okay? I have Microsoft up here. Let's put on the S&P 500. And, I don't know. They don't look, they kind of look similar, but not really. Yes, they do look similar, but in my opinion, I think ASML does a better job at following the S&P 500 than Microsoft does. This is the green one is Microsoft. I think ASML follows the S&P more reliably, and so in my opinion, I just think it could be a really good opportunity to buy a pretty amazing stock if we see the S&P 500 fall to that 20, that 15 to that 20 to 30% range that I was talking about with this drawdown indicator. If something like that happens, which I think is going to be pretty soon, I would load up on. It could be a good idea to buy ASML, but I would do your own research and see. How that looks. And actually, the only stock I will say that's really similar to the S&P 500 is, oh wow, I just broke my website. Is American Express. So we can look at American Express. We can look at the S&P 500, and it's not too. You can see these two follow pretty closely as well, But the difference is, I mean, would you really want to buy, American Express when it's basically done only slightly better than the S&P 500? Or would you rather do ASML that literally has a monopoly over its industry, which did what? Like, it went from $250 to, $1,300, like almost like a 4x. Yeah, to me, it's a no-brainer. And one thing that wouldn't surprise me is I have the 200-day moving average here. So it takes the 200 days of the stock price and condenses it into one. Wouldn't really surprise me if we come down close to this. I mean, you can look at the price, the history of ASML. I mean, we spent quite a bit of time around the under the 200-week moving average. I mean, if we look, okay, let's just look. I don't know why this stuff is freaking out. The 200-week moving average is at $1,000. So it can easily go down 30% from here. So, yeah, I would expect a 30% drop in ASML reasonably, and it'll probably go under. And like I said, one strategy that could be good is to look at this 200-day moving average and look at this RSI metric. And, if we're below the 200-day moving average and you see some green, this green color here. You didn't really see it over here, unfortunately, but if you're seeing a green and we're under that 200-day moving average, oh mama, it's time to buy. Yeah. Anyways, that's my thoughts on the current state of the market. And that's everything I've discussed for today. So I hope you have an amazing rest of your day, and take care. See you later.